Hello, ladies and gentlemen. This is Investing for the People. At least that's what we're calling it now. And I am your host, Javier Novoa. And on this channel, up until recently, I've just been sporadically posting videos, mostly about a little introduction into my investing and business lives, and also just about what I want the channel to become in the future. But I think it's time to start getting more structured in the channel. You see, the purpose of this channel has been primarily for me to simply put my ideas out there in investing and timestamp them so that then in the future, when I want to demonstrate my record, or if I want to perhaps attract capital for investment, I'll be able to do that by showing, okay, I said that, for example, Jack in the Box was going to go up, and look what happened, here's my track record, and that could go either way. But I really want this channel to benefit myself and others, because the point of view that this channel's taking, where I'm coming from, so to speak, is that I'm a normal person. I'm not a part of the Wall Street establishment. I never graduated from any university. I'm completely self-taught. I am an avid reader, but I'm not someone who's in the establishment. And what I really want to do, my driving passion, my overarching passion for those who are interested, is I want to help people become financially free through investing. You see, through the great tools that have been given to us by modern computing and by the way markets work, it's now easier than ever for the common man to become free, to become self-sufficient through investing in those platforms. I want to show you how I do it. I want to put some of my ideas out there. Another selfish issue and reason for this, and I think it's a very good reason for presenting this material, is that I want to sort of build a community of like-minded individuals so that I could source ideas, so that I can also get ideas from you. You can get ideas from me, and I can get ideas from you. This is basically a peer-to-peer discussion. So while I've been pretty sporadic over the past few months, I've started this channel. I have another channel called The Real Javier Novoa. It's a completely different body of work, but it links in that it's about living free. But this channel is not going to really be philosophical or spiritual. It's simply going to be about investing, pure and simple. So those who like the material on my other channel can watch my other channel. Those who like both can watch both. But those who are coming just for investment information and a discussion about investment, please do visit this channel, Investing for the People. And that name could change, because I'm thinking of other names that might heighten the subscriber base and so on. My interviews that I've posted on this channel have been successful. I want to do more of those. I also want to build the subscriber base and the views. So if you appreciate these videos, if you appreciate this material, please do subscribe, hit the like button, help me out in growing our base, just so that we can have a community discussion. Now, I've been pretty sporadic, as I said, over the last few months, because my methodology for investing is an intuitive methodology. I've read from many authors, but I do build a lot on Jason Apollo Voss's The Intuitive Investor, and there's no need to get very philosophical or spiritual about intuition. Intuition can simply be understood as a mechanism by which the brain sort of processes and organizes all of the information that you've acquired, whether consciously or subconsciously, while you're focused on the topic, and then basically spits out an answer. And of course, we don't have any idea about the inner workings or the inner processes of that, as opposed to simply trying to research and gather information to support a sort of preconceived conclusion. That would be, of course, confirmation bias, and that's a blind spot for a lot of investors. So I start there. So where I research is basically what catches my interest, and then I sort of go down the rabbit hole of that, and I come up with conclusions, then I test those conclusions. It's sort of like one of the great authors said, write drunk, edit sober. Well, I seek ideas drunk, so to speak, which means I'm not going out saying, let me find an idea for how to make money. I just look and say, hey, it looks like more tacos are selling, so I want to look into that industry and see what information I can find. And then, of course, I edit that and I put it through the rigorous investment checklist that we'll talk about on more podcasts. But what that's done is, that would mean that I'm only going to release videos when that catches my fancy. And of course, I agree with Chris Camillo and those guys at Social Arb Investing that say, even though I'm not a strictly social arb investor, but I agree with those guys when they say, we don't have to trade frequently. See, I'm not working for Wall Street, so I don't have to report to investors. I don't have to trade every day, although I could. I don't have to trade every week. I'm looking for one or two good high impact trades a year. And by the way, the one that I'm about to talk about in this podcast, I don't think it's going to be a very quick high impact trade, although it could. I think it just has an upward potential, and it's basically a place to park my money until I figure something out. But I don't want to just release sporadic videos, so I want to have this discussion. So what I'm going to do is I'm going to commit to making an at least once a week podcast. And we could call this the Investing for the People podcast. It's basically going to be a show where I talk about my views, I talk about my investment research and my investment theses, if there are any for the week, or perhaps I ask you about opinions. It could also be seen as sort of a video diary or video journal. And again, journaling is a great way to sort of pull out that information that's processing in your mind. So that's why I'm doing this podcast. That's why I'm going to commit to it at least once a week. So I want to talk about my approach to investing just a little bit here in the beginning and my methodology. What do I look for? And my opinion is I'm open to any sort of security or investment that I can do electronically that I don't really have to leave my house to do. See, the whole point of trading and investing is it's something that I can do from anywhere. It gives me mobility and it gives me the ability to bring in an income from anywhere. So my philosophy and position is anything that I can do online can broadly fall into that category. Jason Apollo Voss makes investing into a broad category that could include anything like opening a business or buying a plane ticket. He says that it's basically putting out energy so that you can get back in excess over that energy. And while I like that definition, mine is going to be, just for the purposes of this channel and for the purposes of my approach, it's going to be much more narrow. It's just going to be things that I can trade online. So that opens me up to stocks. It opens me up to bonds. It, of course, opens me up to currency trading and investing. You'll hear me talking about that. Guys, it of course opens me up to futures contracts. It opens me up to options, and options are what we're going to try to use to multiply my money. But I'm betting on the fact that I can find one or two good trades a year that are going to give me a multiple on my money. And while there are people who say, well, that's not possible and so on and so forth, it's not possible if you constrain yourself to one methodology. If you constrain yourself to day trading, for example, and the constraint is that you can only day trade certain securities, then of course you might limit your upward potential. If you restrain yourself or constrain yourself to another type of security or a way of doing things, then of course that'll be capped. But that's not what I'm doing. I'm not constraining myself. I'm not investing based upon a set methodology. I'm investing based upon what I know about myself and my personality. And my personality is very eclectic. And there's one thing that I love. Well, there's a cluster of disciplines that I love above all else. I love geopolitics. I love psychology, trying to figure out how people tick, why people do the things that they do. I love economics, and in fact, I am trained and studied in Austrian economics. I believe that that's also a huge benefit here. And I love studying companies, but certain aspects of them. So you're going to find me all over the playing field based upon those constraints. And I'll even say that we could call what I'm going to do, what I'm going to be expounding in these podcasts that are coming up, geopolitical intuitive investing. I'm looking at events in the world. I'm looking at where I think the geopolitical and economic global situation is going. And then I'm sort of opening my eyes in my circles, and I'm trying to source ideas, surface ideas. And then when I surface ideas, I come up with a hypothesis, and then I get to work really studying. I'll spend maybe 20 to 40 hours drilling deep into that topic, into that company, or into that bet, into that. See, because again, as I've said, my range is very broad, so we could also be betting on the poly market. That's certainly a way to make a return on investment. So I'm going to be deciding what securities, and the only standard is that those securities be readily available to me online that I'm going to invest in, and then I'll structure that based on those studies. So if you like that, if you're sort of eclectic and you like geopolitics, you like history, you like economics, this channel's going to be for you. So again, I'd invite you to hit the like button and subscribe to the channel if you like that. So again, I will draw upon many methodologies because I've studied them all. I have tons of books right here on investing. I started with, of course, years ago, probably 15 years ago, Harry Brown's book. It's called Fail-Proof Investing. Harry Brown was a libertarian candidate for president. He was also a great investor in his own right. He forecasted a lot of what was going on and so on and so forth economically during his time. And he wrote this book called Fail-Proof Investing, which is basically a precursor to Ray Dalio's sort of Four Seasons portfolio. If you've ever read that, you can read the investment book Money, I think, Mastering the Game by Tony Robbins, which expounds that. Harry Brown had this before. And it's basically a very simple way of investing whereby you divide your money into four categories. First category is you put it in cash. The second category is that you put some in bonds. The third category is that you put some in stocks. And then the fourth category is that you put some into precious metals. And you rebalance that every year. So every year, some of those will have gone up and some of those will have gone down. Well, the shares that have gone up, you sell off some of those shares. And then the shares that have gone down, you buy more. And then over time, you consistently make a little bit of money. Of course, index funds are also good for this. This is for inactive investors. And I'll tell you about this too. I might park my money in sort of a portfolio like that while I'm waiting on things to happen. It's a very low risk strategy. But of course, I read all the material of Warren Buffett, value investing, and those are principles, guys. Those are principles that I will implement in everything that I'm looking at. But of course, I don't go into it as a value investor, and I'm not afraid to deviate from the principles of value investing. For example, if you read a book like Rule 1 Investing, which is a very good book by Mr. Town, Phil Town, he talks about the fact that one of the tenets of value investing is that you want to have a company that's established. So you want to study their financial statements for 10 years before you want to invest. It's like the first thing you do, even before looking at the price. And you want to see at least a 10% rise in certain categories like sales. You want to see a 10% rise in net income. You want to see a 10% rise in cash flow. Things like this. That's very rational. But what do you do in years like COVID where everybody went down? Well, then those principles sort of break down. And that's my philosophy in investing. There are no rules, guys. It's a secret. I'm going to probably be canceled due to this, but there are no rules. And I really do believe that intuition and feeling is an arbiter. is the final arbiter, because once you get all of your information, you have to have some way of deciding between the different alternatives in the buffet, if you will, of information given you. Plus, nobody could gather all of the information that's necessary. So, I believe your feeling is the arbiter. You've got to have some kind of methodology for honing those feelings, making sure that those feelings are an accurate representation of what's happening. And that's a practice, guys. It's a practice, and we might talk about it more on these podcasts. So that's basically my methodology. I will pull from and use all methodologies, but I will not be afraid to deviate from that and to also throw in some of my own metrics and my own standards as we go along. And again, if you don't believe me on the feeling and intuition part, just look into George Soros and how he traded. Many people say that his books, like The Alchemy of Finance, were written sort of a posteriori, after the fact, and he just had to have some sort of model to be able to explain how he traded, but that he really never used any sort of model, but rather he just, basically they said he traded based upon a feeling in his back. That's what we're trying to hone our skills to being here. So you're not going to find us following any sort of school of thought here. So that being said, let me go into just a little bit, guys, my current investments. And again, I'm looking for an investment that's going to be that once or twice in a year investment that's going to really multiply my money. This is not it, guys. And this is not a high conviction trade. And remember, in my methodology, I can invest in anything, even low conviction trades. I just reduce the amount of shares I buy. So if I have very low conviction, I'm not really confident in the thesis, then I can buy one share of that. If I'm really confident in the thesis, I can take my whole net worth and sell everything and just pour it into that one stock, but you have to gauge it according to your conviction. This is sort of a medium conviction trade. And a few days ago, I announced the fact that I'm buying Jack in the Box. And at that time, I believe it was around $46 a share. Well, Jack in the Box is now sitting at $50. And I think Jack in the Box has a new support. And of course, for those of you who don't know, the support is that price at which, when it goes below that, traders start buying again and it goes up. Resistance, these are technical terms for those of you who might not know. Resistance is a roof where the price goes up, and when it goes above that, people get nervous, they start selling, the price lowers. These change all the time according to whatever technical models you follow. And again, I'm not a technical guy, by the way. I use them for entry and exits, but I don't really look at technical indicators. I'm looking more at what do I think is going to happen with this stock, and what information do I think I have in my intuition, in my gut, as to why this stock might go up. Well, Jack in the Box has gone up. Guys, honestly, even before I did a lot of research, and I did do a lot of research this week into Jack in the Box, this is a no-brainer. It went down from a high, and I'm going to see exactly what high it went down. What was the high of Jack in the Box this year? So it was at 86.20, guys. And then it dropped to about 44. It was at 86.20, and then it dropped to about 44. Guys, without any analysis, I like Jack in the Box. Every time I go to Jack in the Box, there are a bunch of people there. I think it's a no-brainer to at least buy a few shares. Then I started thinking about this with my geopolitical economic theses. Guys, first of all, there's a lot of doubt due to the coming election that's coming up. Nobody really knows what's going on. There's uncertainty. And guys, we know from the numbers now that people are not going to eat at fine dining establishments. But people still want to go out to eat. And here's the kicker. These kids are going out to drink and party no matter what. And a lot of people, after they go out and drink and party, they buy Jack in the Box tacos. So Jack in the Box tacos remains a popular menu item. And whenever I go to my local Jack in the Box, I order those and I see a line. So There are a lot of people there. Intuitively, to me, it seems like Jack in the Box was a good investment. Also, I peeled into their financial statements and found a few gems here. First of all, they just fired their CFO. He left. And they're saying that he had planned to exit and so on and so forth, but they're bringing on a new CFO. There could be some under-the-ground uncertainty, and I'm still doing research into this. There could have been a crash there, a crash in confidence, and now with this new CFO, they could turn it around. That's potential. If they turn it around, there's a huge potential upside. There's another very interesting thing that I didn't mention because I just figured this out the other day. Do you know how many Jack in the Boxes Alabama has? Take a gander at it. Well, Alabama has 0 Jack in the Boxes. And there are some states with only double-digit amounts of Jack in the Boxes. Now, Texas, we have a lot of Jack in the Boxes. Jack in the Box still has a great opportunity to expand within the United States. And I know that they're planning on building some in Alabama in the near future. Guys, it's a no-brainer. Now, when is this going to happen? When is the stock going to go up? Is it going to go very much higher this year? I don't know, which is why I didn't bet the farm on it. But I would recommend, just again, due to geopolitical actualities, due to the fact there's a new start with a new CFO, and due to the fact that Jack in the Box does have the opportunity to expand within the United States, buy Jack in the Box, guys. It's almost a no-brainer. Again, I have to have a disclaimer. When I say buy Jack in the Box, I'm talking to myself. This is not investment advice. None of this is investment advice. Take this for entertainment value only and as a conversation between friends because we're not investment advisors. We're not allowed to give investment advice. So that's my Jack in the Box thesis, guys. Still down by half. Down by 50%. Now, there are some stocks that go down and stay down. My gut feeling is that Jack in the Box is not going to stay down. And by the way, you're going to see me using any tool that I have available to me. And one of those guys is ChatGPT. Now, we'll talk about this in another episode. I am not a believer in AI in the sense that I don't believe that AI is this revolutionary monster that everyone's talking about. I do believe that the processes of meta-programming, what they call AI, are going to be useful for a quick retrieval of information and for practice. That being said, whatever you read on ChatGPT, check it, because I've been testing it over the past few months. There have been some mistakes. It's given me incorrect information that I verified was incorrect. It's also given me links that were dead, websites that were not there. So it is not the end-all and be-all. It has human fallacy and human error built into it. That's actually a good thing because we're not going to be replaced, guys. It's not going to happen. That's my thesis. Again, we'll talk about it on another show. But I do ask it questions. And I'll share with you some of the information I get, because one of the best ways to ask ChatGPT questions is to couch it in terms of a dialogue and to bring a person before you, because a ChatGPT basically creates these avatars. So what I'll do is I will summon up on ChatGPT, say Warren Buffett, and if I can find the question that I asked Warren Buffett about Jack in the Box, and I want to share this with you because it's very interesting. Other journalists and so on and so forth, intellectuals, if I can still find it. I asked Warren Buffett about investing in Jack in the Box. Here's the answer that I get in form of a dialogue from ChatGPT. I say, Warren, what would you say to my investment in Jack in the Box? Could it be a value investment? What's your view on this? Warren says, well, let me start by saying that value investing isn't just about finding cheap stocks, but finding undervalued businesses with strong fundamentals. Remember, I'm not strictly following value investing, but I do want to know all of the various angles of it. Jack in the Box does have potential in some respects. However, one key to any investment decision is the company's debt management. And this is what I talked about a little bit, touched on. The The company does have a lot of debt, and I think some analysts were saying that it could not meet its short-term capital needs. I believe, see guys, and I may be naive, and it might bear out that I was naive, but I think the brand of Jack in the Box and the simply magnetic power of that brand that it still enjoys trumps all of these debt situations. It remains to be seen, but I don't think Jack in the Box is in trouble, guys. I don't. I think it has huge potential for growth, but it makes Warren Buffett nervous, according to his, according to the Warren Buffett character on ChatGPT, according to his value investment thesis. But we'll see what he says here. Jack in the Box has been struggling with high levels of debt, and again, this could be an advantage for us, which is a significant factor to consider in assessing its true value and resilience over time. Another issue is that Warren Buffett's methodology calls for buying a stock and holding it forever. I am definitely not a buy a stock and hold it forever kind of person. Now, there may be investments where I do that, but this investment is to just get some relatively short-term massive gains. I think we can do that. But again, it's not a high conviction trade, which is why I'm not buying options yet before the earnings report. They've got earnings coming out November 20th. Now, if something happens in my research or over the course of the next few days to bolster my confidence, I may buy call options before the earnings report, but I'm not doing that right now. I'm simply buying I've simply bought the stock, and I'm holding that, hoping to see some good short-term gains. Of course, short-term, I mean 1 to 3 years, and we'll see what happens there. This is the thesis that I've got. I'm looking at other opportunities, and we'll be talking about this more on the weekly podcast, but this is what I've got. Look for consistent cash flow and profitability, Warren Buffett says. Jack in the Box profitability fluctuates, which could signal a more volatile outlook, especially if you're considering over the long term. As for growth, while there are expansion opportunities in underserved regions, like you mentioned with Alabama, the brand would need to sustain a solid margin to leverage any new markets effectively. So could it be a value investment? Possibly, but only if you believe in the company's ability to manage its debt while driving growth and maintaining profitability. So, guys, use every tool available to you. And again, if you have any comments about my investment in Jack in the Box, please do comment in the comments. We'll have a discussion. You might know something I don't. I may know something you don't. We can have some fun with this. So, I just want to go on with a little point by point of what happened this week, guys, because a very important thing happened last week, and that was the BRICS conference, guys. The BRICS got together, which is basically Brazil, Russia, India, China, South Africa, and they had this monumental conference. First of all, 6 new countries joined the BRICS. Egypt, Ethiopia, Iran, Saudi Arabia. Was really weird because Iran and Saudi Arabia are notorious historic enemies because one is Sunni and one is Shi'i. But they're all in there, and the UAE. What does this mean, guys? I believe that the BRICS is the new Warsaw Pact treaty with a lot more economic power because the BRICS are not communist. They are capitalists, but they're looking after their own benefit, and they're there to undercut American aggression. They're there to undercut the dollar. It's what's going to happen. It's not going to happen tomorrow, guys. You can watch my interviews with Jim Rogers that I've posted on this channel for that, but it is happening. The center of gravity for geopolitical power is transferring to the BRICS, guys. We have to watch this very closely, and we have to watch how we can profit from it. So, the BRICS now is going to cover a large portion of the global population and resources, guys, which is going to shift power. Also mentioning the BRICS will control a considerable portion of oil and resource exports. Of course, the Muslim world has always had a primary standing in that. Many Muslim countries are now joining the BRICS. We have to look at that as a transfer of geopolitical power to the Islamic world. Again, over the last 20 years, we've seen a decline in Islamic geopolitical influence. Maybe we'll see a rise in it again now. So, This, of course, potentially strengthens the influence of the BRICS. Now, BRICS nations, guys, represent about 42% of the global population, around 24% of global GDP. With new additions, these numbers will grow, and the bloc may reach over 30% of global GDP. Now, mind you, if you look at journalists like Pepe Escobar, who is a Brazilian journalist, and they covered this conference, you'll see that the membership levels of these new countries that have entered are not clear. It's not clear if these are full members. It's not clear what their powers and responsibilities will be. BRICS is relatively new, so they're still trying to decide all of this and discuss all of this, but nothing is clear yet. But what is clear is there is a center of gravity forming on the global south, so to speak, including the powerhouses of China and Russia, that are going to change the geopolitical and therefore economic center of gravity. It's what Jim Rogers has been saying all along. BRICS expansion could influence investor decisions, especially in commodities like oil, gas, and metals. Commodities are something that I've always wanted to look at. I've always looked at. I've even looked at recently cocoa, which has wildly fluctuated. Wish I would have got in that. I never pulled the trigger on that trade, but commodities are a good trade. Again, if you know what you're doing, you have good risk management. Commodities futures can be a good option, and we'll be talking about it on this podcast, I'm sure. So here's my move, and I've talked about this too, on the BRICS, guys. They're forming a new basket of currencies. They might call it a unit of account. It's going to be a basket of currencies for now. It's going to include many of the currencies of the countries that are subsumed under that. Silver is going to be a huge part of that. It's going to be based on silver. Now, for the past 15 years, I've been buying silver every month, little by little, and I have silver. I'm not really changing what I'm doing. I'm buying silver little by little. And again, this is not investment advice, but just as a conversation between friends, look into buying silver month by month, because silver is going up. It has been going up. It's gone up this week. And by the way, gold has gone up to another record high this week. Precious metals are going up because people are simply, slowly but surely, gradually losing faith in these fiat currencies, which are a deception, guys. If you study Austrian economics, you know that fiat currencies are based upon nothing, and therefore there's an unlimited ability to expand them, and therefore they lose their value. They always go to zero. Just study the Weimar Republic. Buy silver. I'm buying silver. That's what I'm doing. Again, this is not a huge trade. This is not something in which I'm expecting my money to go up 10 or 100 times. Stay tuned for that. I'm still open to those ideas. But right now, this is what I'm doing, guys. Silver and Jack in the Box. So if you have any comments about it, please do comment below. Maybe you can help me find something better. We'll research that. So just a little point by point of what happened in Wall Street this week. I want to do this on every podcast. Just some bullet points. So the market saw notable ups and downs as investors weighed mixed economic data against the backdrop of earnings season. Some of the data was good. Then, of course, we see payrolls were way down again. So, guys, it was volatile. No one really knows what's going on. And, guys, let's just agree that we all know that these numbers right before an election, it's 3 days before the election here in the United States, these numbers are all cooked. I wouldn't initiate any really new investments right now until after the election, until we see what's going to happen, guys. Some people are talking about civil unrest. Harris-Trump is 50-50. 50% may go to Harris, 50% may go to Trump. Even the pollsters are saying we cannot say what will happen. Now, Geo, my friends Chris Camillo and Dumb Money have been talking about Geo as the Trump bet, and it did gain this week. So perhaps a lot of people, especially on Wall Street, think that Trump may win. Again, it remains to be seen what will happen with that. There's just a lot of volatility. Earnings season highlights. Some of the biggest companies reported earnings with results mixed across sectors. Tech giants like Amazon and Meta had strong reports, thanks to resilient revenue and cloud growth, which boosted the tech sector midweek. However, companies in the consumer and industrial sectors, because nobody has money, guys, all of this fake money is going up, but none of the consumers really have money, posted softer earnings, reflecting consumer belt tightening and cost pressures. Jobs data and inflation concerns. The latest jobs report showed a slight cooling in hiring, which initially helped ease inflation fears but didn't provide enough clarity on the Fed's next move. The market is still guessing whether the Fed will raise rates again this year, leaving some uncertainty. They should raise them. Oil drops. Oil prices dip. Oil prices saw a slight drop last week. It's like what Jim Rogers said. It leads me to believe that hopefully the situation in the Middle East is not going to ignite into a fireball, because the oil markets are calm and people who know what they're talking about invest in oil. We can pray, guys, for peace. That's what we're hoping for. Maybe it's a good time to invest in oil. We might talk about that on another podcast. S&P and NASDAQ performance. The S&P 500 had a volatile week, ending with slight gains, while the NASDAQ held steady, supported by strong tech earnings. The Dow remained relatively flat as a mix of earnings results and economic indicators balanced out, guys. I would say, and again, this isn't investment advice, this week let's hunker down. I wouldn't make any new trades until after the election. We will see what happens. Hunker down, guys, this week. Hope you had a great week in the markets. Hope you have a great week. I hope you and your family are safe, healthy, and blessed. It was a pleasure talking to you on this first Investing for the People podcast. Please do subscribe to the channel, like the channel. Help me have this good discussion with you. And until next week, guys, with much love and appreciation, this is Javier Novoa signing off for Investing for the People.